Knowledge is being aware of what you can do. Wisdom is knowing when not to do it. My friends, every day we establish the rules, we inculcate the knowledge and the wisdom as we move through time. All we ask is 10 to 15 minutes a day learning the nuances of how these charts work. Now, let's focus in on what happened today in the market, starting, of course, first with the weekly time frame, then going to the 2-day time frame, then the half day. And how do we always start? With the S&P 500. We see stocks are down for the day. The S&P down 0.78%. Price percent oscillator slowly pulling away from the red signal line. Derivative oscillator gaining downward momentum. We have a green, pretty much a doji so far this week. Lots of indecision. We'll continue to watch as the downward pressure continues to exert itself. 2-day chart. We can see where price percent oscillators pulling away from the red signal line. Derivative oscillators heating up. Now we look at the latest 2-day candle. This is the first day of the latest one. It's trying to push through that weekly chart. Now that is the Heikin Ashi candlestick. Those of you who don't know what a Heikin Ashi candlestick is, means average pace in Japanese. It is formulated, calculated differently in the high open, low close. I'm going to put at the end of today's training, the Heikin Ashi candlestick training. Like a couple 100,000 people have taken that. It's one of the most popular you'll find on the internet. Want you to take it. If you hadn't taken it in a while, take it again. Really good to know. Now, that's what is up first day of the latest 2-day candle. What's up with the half day? We see where it tried to cross over in the morning and then weakened in the afternoon. So we'll continue to watch. That was after things blew up on Monday and then sort of lost that steam on Tuesday. Where do we expect things to go? How do they typically move? They move in the direction of the largest chart. All things being equal, the market tends to move in the direction of the largest. Now, we've had some screwiness since January. All the last screwiness occurred right around the time of the inaugural. And then, of course, things started to take off and crossover going up, which they did for 2 weeks. And then, of course, started to flounder and crossover going down. So again, we will watch, we will see, we will wait, we will practice, and we will learn. Let's move on from the S&P to the Nasdaq 100. QQQ, what do we see there? Down the most for the day, 1.60%. We see a solid green down candle. That's a slowdown in the strong movement from last week. We see the price percent oscillator pulling away from the red signal line. Derivative oscillator gaining downward momentum. 2-day chart. What do we see there? Again, all important price percent oscillator spiking over, going down along with the derivative oscillator. We have a green open box spinning top that is forming. Again, first day of the latest 2-day candle as things are. Again, what we're seeing from price movement is sliding sideways, trying to move up on that 2-day as far as the Heikin Ashi candlestick goes, but the all-important price percent oscillator spiking down there. Shows you where that overall pressure is. What do we see on the half day? We see things weakening. Red open box spinning top, a slowdown in the up movement, and then a solid red candle going down at the end of the day. Price percent oscillator weakening. Derivative oscillator still gaining a little momentum. What's left over from that Monday bounce up? So we'll continue to watch, see where these charts lead us. We're leaving stocks now, going to bonds. Bonds about flat, up a little bit, 0.01%, 0.1%. What do we see as far as the market goes on the weekly chart? We can see a red down candle forming. We haven't hit the peak down that we hit last week, but that price percent oscillator and derivative oscillator continuing to rocket down. 2-day chart flattening. Price percent oscillator still moving down some. Derivative oscillator losing downward momentum, but we can see that sideways slide underway with that downward pressure from the weekly chart still pushing on things. What do we see on the half day? We saw that crossover on the half day chart back on Friday. Let's go ahead and reflect that. Well, it's hard to reflect much of anything the way it's going so sideways, but we see where things bumped up on Friday afternoon and then sort of sliding sideways since then. As far as Heikin-Ashi candlesticks go, we see on that half-day chart as it's gaining some momentum as it's sliding sideways after that bounce down. That's still that momentum left over. We'll see how much longer that continues on. Just flat for the day. Where are we on gold as we go to it? Up for the day, 0.54%, so a little over 0.5%. Still moving down on that weekly chart. Price percent oscillator heading down. Derivative oscillator gaining downward momentum. Haven't hit the low from last week yet, but again, getting close. Again, red down candle. We go to the 2-day, first day of the latest 2-day candle. Again, moving down, not hit the low. Price percent oscillator, though, still moving down strongly along with the derivative oscillator. Half day, that's where we see where things bottomed. And then slowly moving up, not much in the morning, but a little bit in the afternoon, not covering where it dropped down on the afternoon on Monday. So we'll continue to watch and see what gold's doing. We can see how gold has accelerated down and then sort of bottomed out, gained a little, and then dropped again. How much more can gold go down? Well, you could be surprised. We'll watch. I'm just waiting for gold to bottom out and take off. I can't wait to buy it in a good practice trade. But we've been shorting it for a while now. Now, that is where we are on our 4 big charts. Lastly, we go to Bitcoin because you asked. Bitcoin down for the day, 1.39%. We can see where things have been stalling. Going into the second week of a big stall on Bitcoin, we have a little red open box candle with a little wick on top. Again, price percent oscillator heading down, derivative oscillator gaining downward momentum. First day of the latest 2-day candle. After that 2-day crossover going down, a red candle forming, not hitting the low it did before, but again, heading down, derivative oscillator negative also. What do we see on the half-day chart? We can see where things peaked back on Friday, the 19th of February, and then things bumped down sideways for a little while, bumped down again, and sort of bumped down a little bit today. So we'll just continue to watch. What are we waiting for? Well, that 2-day recross going back up, if that's what's going to happen, or we're going to have a weekly vertical crossover going down on Bitcoin, which, as you can see from the past, might take quite a while for it to recover back. I have a feeling that Bitcoin's probably just digesting like it did in the past back in late January, sort of digesting the bump up, and then it'll roll back over again. So it'll roll back up again. So that's where we are. We'll again let the charts lead us. We let the charts lead us. We don't divine things, we follow trends. We have a great training for you in the show notes today. If you are a subscriber, Every Indicator Can Fail gives you good advice about how to deal with those situations. If you're not a subscriber, then you're not receiving the daily trainings. How do you do that? Go to chartingwealth.com, sign up for free. Don't forget, Patreon supporters, we have the live question and answer call in tomorrow, 12:30 Eastern Standard Time. Look for the email. God bless, all the best from the whole team at Charting Wealth World Headquarters.